Just gonna say it again, non-QM deals, you gotta do them, man.
That's what she said.
There's so much business out there to be had. You know how many self-employed people need deals that they can't get, you know, with the current standards that we've got? Non-QM's here to help. Oaktree's here to help. 90 LTV, 12 months bank statements, self-employed, lots of other products, lots of other programs. Great pricing. Have an account executive talk to you today. Click this banner you see right here on your screen, just down below or over on your right, and talk to an Oaktree Funding account executive today.
Okay, so we just spoke about this, but with regard to how the CFPB sees MSAs, with the understanding that they've just rescinded their 2015 MSAs are not good bulletin, here's what they have to say.
So, are they good or are they still problematic for mortgage lenders?
Verbatim from the CFPB, an MSA is still an agreement to pay a referral fee, payment of services in excess of reasonable market value. Now I gotta tell you, that's kind of a slippery one right there, because what's market value? Further, an agreement where duties are not performed or are nominal, payments that are duplicative. The agreement is structured to disguise kickbacks or split charges. Now, to this last point, if this is true, and this is the law of the land from the CFPB, then how in the heck is anything Zillow has ever done with lenders and real estate agent relationships possible? I mean, ever compliant?
Well, we talked about this yesterday, the whole MSA thing, that is. These are the points put out by the CFPB in their FAQ about what you can and what you can't do. Now, I think it's pretty clear that it's not clear at all for what you can and can't do when you enter into an MSA with a real estate company as a mortgage lender.
So our counsel is, at this point, I just wouldn't do it. Now, moving on, and I gotta tell you, this is kind of a big story, a big one here. It now appears that banks, depositories, have been arbitrarily shutting down the business operating accounts of some mortgage brokerages around the country. Now, I personally have been contacted by a Michigan broker about this when it happened to him, but I could not substantiate it at that point that the problem was systemic or national. It now appears to be the case. So here's the reason why we believe they're doing it.
Every day when I leave work, I do this.
Brokers have a number called an NAICS code. That's the North American Industry Classification System. The North American Industry Classification System, or the NAICS, is the standard used by federal statistical agencies in classifying business establishments for the purpose of collecting, analyzing, and publishing statistical data related to the U.S. business economy.
So all brokers have these numbers. It kind of works like a NMLS number for depositories to look at how other industries are operating. So your number as a mortgage broker is 522310. Now on top of that, you have what's called a SIC or an SIC number. Crazy, right? But your subset SIC number as a mortgage broker is 6162, and you could look that up right now.
Okay, so what's happening is something with your NAICS and SIC number is being pulled by your banks that have your business accounts, and you're getting flagged for some reason. Now, even if you haven't done anything wrong, your codes are coming back telling these large depositories to close down these accounts. In this case, mortgage broker business accounts. And that's what they're doing. And this is a huge problem and can get significantly worse.
Seriously, imagine all of your deposits getting frozen, not being able to pull any money out, not being able to meet payroll or even your pay. These are the unintended consequences of what's taking place as we speak. It's unbelievably unfair, yet it's still occurring, and it can bring your business as a mortgage broker to its knees.
Here's a quote from the National Association of Mortgage Brokers. Recently, NAMB was notified by several mortgage brokers across the country that nationwide, banks are randomly closing mortgage broker company business operating accounts. Some have been open and operating for over 10 years. Is this a coordinated attack on mortgage broker companies? We don't know, but we do need to take action now.
And I think we need to do that as an industry. So here's the good thing. NAMB, the National Association of Mortgage Brokers, has a call to action that everybody, not just brokers, needs to participate with. If you're a broker and, I don't know, maybe you're not pro-NAMB for some reason, you should still support this because this is affecting all different variations of mortgage brokers.
To execute the call to action and get this in front of your Congress people is very, very simple. All you do is see the NAMB logo on your screen right here. Just look right down below the video, click it, and it'll take you to where you can execute their call to action to stop this from happening to mortgage brokers across the country. With that, you guys have a great one. Do us a favor, leave us your comments down below, forward, share, and subscribe, and get our mobile app by doing this.
Download the National Real Estate Post mobile app today. Available on Apple Store and Google Play. Just search National Real Estate